When the market is trending downwards, it's simple enough to pack up tools and step away from your trading screens. The fear of continuing to take trades that instantly turn red can be emotionally damaging and have a massive impact on your trading psychology. However, like the great Warren Buffett said, you should be fearful when others are greedy and greedy when others are fearful. When there's fear in the market, that equals opportunity. You should be using your trading skills to your advantage and anchoring down, continuing to buy assets on a discount and take advantage of the current market conditions. And this is one of the benefits and why I chose to trade Forex, is that market sentiment and what's actually happening out in the market shouldn't have any impact on your profitability and your bottom line. And the reason behind this is that you can long and short currency pairs. So even if the market now officially isn't a bear market and we're looking towards a recession, your profitability and your P&L in your Forex trading shouldn't be impacted by anything happening out in the market. And this is exactly what I wanted to discuss today, how you can continue to trade even during the current market conditions and be a profitable Forex trader while during a bear market. What is going on, guys? My name's Thomas and I'm an aspiring Forex trader. I've traded through different market conditions, and today I want to discuss exactly how you can take the opportunity of the current market conditions and going into a bear market to your advantage and continue to be a profitable trader. If I look inwards at my own trading, even over the last 12 to 18 months where we've been on a massive bull run in pretty much all assets, I've actually taken more short trades than I have long. 65% of my trades over the last 12 months have actually been short trades rather than long. And this shows exactly how the current market conditions and market sentiment shouldn't really have any impact on your bottom line and what you actually do with your Forex trading. And a matter of fact is that recessions actually equal more opportunity when it comes to trading currencies. And there are a couple of different reasons behind this, which I'm going to be explaining in today's video. So the main impact that the current market conditions will have on the Forex industry will be economic news. Economic news is one of the major drivers of price, and when economies are battling high inflation, high unemployment and low interest rates, this is going to have an impact on the way that currencies move against each other. And it's simple economics. So if interest rates increase, typically the price of a currency will also increase. And this may not always be the case. A lot of the time, the economic news is actually already factored into the price that you see today. However, if the news that is released is higher or different than what was expected, this will have the impact on the actual currencies, and this will be what drives the volume. And this is a great example of what's actually happening over in the US, is that it was always expected that interest rates were going to increase. However, they increased at a higher rate than what the market believed, and this resulted in high volume and a large change in the US dollar just over the last couple of weeks. If you look at price currently and what it's done over the last 2 weeks, after they increased the interest rates by a significant amount, this had a massive impact on what happened with the actual dollar. And the way that this news may affect you is going to depend on what type of trader you are. If you're a fundamental trader and you rely heavily on economic data and news, then you're going to have endless opportunity out there with the amount of news and changes to interest rates and different economic indicators, which will provide you more opportunity and therefore more profits. However, if you're a technical trader, it's just something you need to take into consideration. I personally am a technical trader, and there are certain economic pieces of information which I will stay away from when they're released. As an example, on the first Friday of every month, they have what's called non-farms payroll. And this is all the unemployment news for the US. And in my own personal trading, I know that the markets are generally moved pretty heavily on that Friday, the first Friday of every month. So I would just stay clear of trading on that day. And it's just something to consider and something to backtest, is that how do economic news data affect your own trading? And when we're looking at bear markets and moving into potentially a recession, these type of news events are going to have a bigger impact on the market. So it's just something to consider. If you are a technical trader, you may be better off staying away from the market during high impact economic news. And I actually went back and did some stats on exactly how much the impact of this particular news for, say, the non-farms payroll has on the movement of the euro dollar. So if we compare the change of price occurred on the first Friday of every month from last year compared to the first Friday of every month from this year for the euro dollar, so how much it actually moved during that day, on average this year, it's increased by 0.24% more on that first Friday compared to what it did last year. So this shows that there is higher volatility in the market, there's more movement and more volume, which therefore can potentially create more opportunity in your own trading. And the second way which the current market conditions can have a positive impact on your trading systems is through a higher ATR. So an ATR is your average true range, and this is how much the trading currencies move within a selected time period. So a lot of people use either a 7 or a 14-day ATR, and this basically means What's the average range that a particular pair has moved within a week or a 2-week time period? And when the markets are more volatile and news events and different things in the market are making prices move more, this is going to result in a higher ATR. Now, if there's a higher ATR, that means there's more volume and more movement in the market, which should mean there's more trading opportunities available for yourself. Typically, markets spend between 65 and 70% of the time in consolidation. However, the 30% of the time is typically when the larger moves and the higher Rs are able to be taken. And this is going to be like the markets that we're in now. We're seeing higher volatility and more trending markets, and this is going to result in more trend continuation trades and the ability to potentially take more R out of the market and increase your profitability on each individual trade. So even if we look over at the markets again and we look at the ATR back in October compared to now, you can see a pretty significant increase in the ATR and the amount that the actual pair is moving each individual day. And this correlates pretty heavily with the downturn of the Euro US dollar. And as we were saying before, as the interest rates have been increasing in the US dollar has increased in value. And this has resulted in the Euro US dollar as a pair to decrease, and which is correlated pretty heavily with the change in the ATR. So if the markets are moving faster and they're moving for longer ranges, this is going to result in more trading opportunities, particularly if you're a price action trader. If you're able to take advantage of the volatility and volume in the market, there should be more opportunities out there for you to be able to take advantage of the current market conditions and increase your current P&L. And this is the reasons why you shouldn't be stepping away from the markets even during a recession. There is endless opportunities out there for you to take advantage of, and don't be fearful of the current market conditions. Use them to your advantage. Use your skills and your knowledge to be able to take more from the market and increase your profitability. So that's exactly how you should be trading during a recession. Make sure to take advantage of the current market conditions, use the volume and volatility to your advantage, and create more opportunity and therefore more profitability. Thank you so much for tuning in, guys. If you did enjoy the video, please feel free to smash that like button, hit subscribe, or comment down below if you've got any questions. Otherwise, thank you so much for tuning in. I look forward to seeing you next time.